Yeah. Let's go. Woo. Bringing that energy. Feeling a little low energy level, so just had to turn on some Motley Crue. Get the juice flowing a little bit. So welcome back to another video. We're gonna be going over imbalances. Imbalances are amazing. They're all over the market. Every single time frame possible, there is an imbalance. Price loves to move from imbalance to imbalance, liquidity to liquidity. Got that from another trading professional out there in the trading realm. So let's get right into it. Share my screen. Boom. Beautiful. Go to imbalances. And let's check out the slides before we move on to TradingView to go over some more volume imbalances. So volume imbalances refer to situations where there's a significant disparity between buying and selling volumes of a particular currency pair at a given price level. Now, these imbalances can provide insights into potential market shifts, direction, and really, when we're looking at imbalances, it is the amount of pressure from mainly big corporations and institutions and people with a lot of money that create imbalances, because to move the market 2% is in the billions of dollars. So for a volume imbalance to occur, you have to really think about how much money is entering that specific market, right? So let's look at an example of an imbalance in price. We have a 1 hour bullish candlestick on Euro USD. Now, I would assume that there was some sort of news to create this reaction within the markets. Now, buyers are in control, right? And a certain event caused price to violently move higher. So you have a 1 hour candlestick with the body being much larger than the other candlesticks that form on this chart, right? Notice something here. Notice how the body of this 1 hour candlestick does not get filled by the next 2 or 3 hours following that period of time. Like, these candlesticks right here do not come down and trade through any of this body. So this body indicates a imbalance in price. So something occurred. Well, I think it's manipulation personally, but what it really is people investing into the market because of news release or data came out that was conducive to fear or hope. So whatever it may have been, the market reacts a certain way. Notice that after it reaches a certain level, it hits a resistance and it travels back to the middle of this body. It doesn't go the full length of it, but it goes to the middle of the body. So you draw a rectangle, or even if you measured the 50% of that body, it would measure out and perfectly hit where the market retraced to. Notice how there was still a rejection it rejected and went higher, but then still traveled lower, consuming more liquidity, or more selling pressure was here before buying up again. This movement from here to here to here, I mean, that's volatility, right? Because there's no pattern to that. That's just a huge buy up, huge dip down, buys up a little bit, dips down again to where exactly it was the day before, and then trades higher again, like, you know, obviously tearing up that high, the previous high, spikes back down again, just eliminating all the buying here. And so the market's all over the place. And even over here on the 1 hour, there's smaller 1 hour imbalances right here. These are imbalances. Like when we go through this on TradingView, I'm going to show you in depth how many imbalances there are, how we could take advantage of them, when they most occur, which is, like I said, during 8:30 a.m., anytime during news, especially during London session, depends on the currency pair as well, or the asset that you're trading. There's moments that the markets just make massive moves like this. Volatility during, you know, economic hardship, during presidency changes. So coming up in 2024, it's going to be a volatile time within the investment world. So let's check out the let's check out the charts on TradingView. By the way, it is Black Friday. I guess they're doing a Black Friday or something on their, you know, you can, everything that sells everything. There is always going to be, God, man, I missed this move by the chin of, oh my God, bro. I couldn't believe that I missed this move. Like, I couldn't believe that I missed this move. I was so upset because I just placed the limit. And I mean, I'm talking not even an hour before that, it hit price and just took off. So we'll see. Hopefully ETH comes back down. Anyway, I'm getting into a little crypto. So also, speaking of imbalances, there are so many on crypto. It's actually ridiculous. So for example, right, check out this imbalance right here. I mean, this one's massive. And in the crypto space, it's pretty often you have imbalance opportunities on this currency pair. So boom, the 50% of this body got hit perfectly right here. Any buy limits within this area would have done very, very well as long as you take profit, right? So anyway, first example of an imbalance right there, 1 hour imbalance. So, but let's go to the currency pairs, because, you know, I feel that it is the best form of chart analysis, you know, in terms of analyzing an asset, even if it comes to stocks, whatever it may be. Currencies are the best markets to look at when analyzing imbalances. Which one did I want to do? I think it was this one. So this is the one we've been looking at, right? Okay, perfect. So beautiful. So we are starting to see that uptrend form. And notice how we are having significant swings within the uptrending market, right? So when I highlight this, how many down areas are there within the uptrend? What I mean by that is pullbacks or manipulated price action, whatever it may be. Look at all of the swings downward that are getting created. And I gotta turn my brightness up a little bit. Holy shit. That are creating what we call imbalances. And then what we want to look for is buy imbalances, right? We don't want to be looking for sell imbalances. We don't want to be selling at these imbalances. Of course, there's opportunities to, but we want to be buying at the imbalances, right? So let's go ahead and zoom in here on this uptrend on your USD, right? Let's zoom in here. We have our first move upward, right, in October 3rd of 2023. So price is trading high. We have extreme volatility here, which I mean, of course, right when this candle prints, this 8 o'clock candle, it shoots down wicks, creating a large imbalance here. It gets filled right away with the buy candle, though, 2 hours later, it gets filled by this 1 hour buy candle, and then it shoots up. That is manipulation right here. That's crap, right? You can't possibly trade that very well. You'd have to get somewhat lucky, right? But what do we have available to us? That manipulation leaves us a beautiful looking imbalance. Let's check it out. So massive sell candle, and then into 3 large buy candles. This is price action as well, mixed with imbalances. See this noticeable gap where no wick trades through this body? This wick reaches here. Where's the shoot at? This wick reaches there, right? This wick right here reaches to there. This wick only reaches to there. So we have this body that hasn't been traded through in price. What do we notice the following evening and day, technically, right? Market closes here at 1600 hours on Friday, opens on Sunday, trades right into the imbalance here, and then at 8 a.m. starts to buy up into the next trading session, and then continues to buy into the next session as well. So boom, first imbalance for the uptrend is noticed, right? We notice that we have a lot of buying here. We continue to follow the 1 hour and look at the bodies, right? Look at the bodies. This one is a awkward imbalance, to say the least. It's got some price action here and price action here as well. So, I mean, I guess you could say this would be the imbalance, right? So any buying in here would have been an okay opportunity. And then we have it again here, right? This large body is created and gets filled right here, right? So price action trades through the imbalance. That is what we're going over, right? The imbalance, the price that gaps, it's a disparity in market, remember, in market movement, gets filled, no matter if it gets traded straight through, hits the 50% and then reverses, or barely hits the 10% and then busts up. So there's imbalances getting created everywhere, along with order blocks. Like this was an order block that got filled here, right? And then the market comes crashing down for a bigger retracement of the overall trend. And you're always going to have that, right? So look, right, it came further than the 61% retracement. So here we are on our imbalances. Boom, massive news release. I mean, look at the size of this imbalance right here, guys. From this wick to this wick, right? So this is a massive imbalance. It doesn't have to get traded through right away, meaning following like the hours prior, but it must get traded through eventually up into here. And what do we notice that happens? It does, right? Notice that the gray box gets filled about, what is this, like 7 days later, a whole week before price trades through here again, right? So imbalances don't need to be filled right away, but they eventually will get filled. But if you're in a bigger time frame trend, sometimes they don't get filled at all. So imbalances are pretty cool. It's a really good way to analyze the market. I've had a lot of success with imbalances. It's an amazing way to look at the markets, along with liquidity, right? So boom, liquidity here, imbalance here, right? Imbalance here, liquidity here. And then we got probably I was going to say, this is technically liquidity that just gets left open for later. Barely actually doesn't even reach that low. It goes ahead and swipes this liquidity though. Yep. So that liquidity gets met. This imbalance gets met. This imbalance gets met there. So there's so much going on here, guys. Like just in imbalances, like even here, I guarantee you this was a 15-minute imbalance and then got hit here. Notice that? See how this wick comes up and reaches this body? So there's disparities to trade everywhere. I mean, even look at how small this one is right here. Boom, twice. Once here, another time here. So imbalances are large gaps in price that must be filled. Here's a great example of getting caught in a buy and then getting absolutely dumped on. Because what happens is you have a massive day like this where at 9 o'clock price just trades super high, but then it just comes right back down the other direction. So for example, say you have people trading the fib from this low to this high, right? They're looking for what? They're looking for a buy at the 382, which is an imbalance, right? And they're looking for buys at 50%, which is a major support / resistance level, right? And what happens is market just keeps dumping and goes all the way to previous buy side liquidity. And then it buys up, but dips down one more time to buy side liquidity just to make sure people miss out a majority of the move. Then it takes off into the bigger uptrend, creating what? More imbalances in price. So actually throughout here, we don't have a whole lot of imbalances being created. Now, this would be an imbalance here. This is a pretty okay imbalance that gets filled later by price. But let's look at just the amount of buying there is in here on EURUSD. So look at this imbalance. No, I mean they're very noticeable. You guys should be able to point it out pretty quick or notice it pretty quick. Look how large of an imbalance this is, right? This is a massive 1 hour candle. This one candle travels 64, 70 pips, whatever. Price retraces at least midway to fill price before going higher. It's choppy, right? For 3 days, it's choppy as a mother trucker. And then price just booms. I mean, baby, look at this move. This move was crazy. 163 pips in 4 hours. Unbelievable. So what do we have? Imbalance here, imbalance here. What else does that happen to be? Large support and resistance level, 107,698. Market could easily travel down to that imbalance. And then we look for what? Another buy opportunity to the upside. That is how we use imbalances, ladies and gentlemen. Now, check this out. What about this over here? Notice how we're selling here. We're selling. Price is at a 1 hour imbalance as we speak. For a sell. If we're anticipating that price is going to continue selling to this imbalance, we can somewhat still spot imbalances to the downside for a sell. So even on the 15-minute, probably even on the 30, we're going to go to 30 first. So boom, the 30 actually is getting, the 30 already got filled. The 30 and the 15-minute imbalance already got filled, but price is trading into it on the 1 hour now. So there's still a 1 hour imbalance, right? And a 4 hour. 4 hours technically an imbalance as well. This 4 hour imbalance didn't get filled, but will get filled later when it buys up higher. But notice the 4 hour imbalances as well here. They're still very clear to see. So that's all I have to show you on imbalances. We're probably going to go more in depth in it on institutional, especially in in later advanced videos. But I hope y'all enjoyed this video, brought the energy to you. Take notes, apply it, and reach out. Tell us how you did. Send your testimonials in 1022. Let us know how you're doing. Post us on your social media if you are succeeding. And I hope to see you guys all in the next one. Take care.